AT&T stock hits a 30-year low as toxic lead cables become the company's new issue through an explosive new report. Now, there are 2,000 lead cables overhead and in the ground spanning across the U.S. owned by AT&T and Verizon. These lead cables could leach into soil and water that far exceeds the EPA safety recommendations. Now, lead cable use started in the 1880s, and these companies started to phase out the use of lead cables in the 1950s and completely stopped using them by the 1980s. AT&T has responded to this by saying lead cables represent less than 10% of its cables. This brought some relief to investors, and after the stock took a nosedive, it has since recovered some. Recently, AT&T planned to remove these lead cables from Lake Tahoe, which they claim poses no danger to the public, but decided to remove them to avoid litigation, but now has paused that removal due to more testing that they want to do. All this cleanup adds up to billions of dollars and could span for decades to complete. The main issues I see is removing these cables could be exposing workers to lead, as well as any litigation related to the contamination of soil and water or public exposure of any kind. It will be a careful balancing act how these companies approach these situations. So this is affecting Verizon and AT&T, but of course I own AT&T, lucky me. So we are going to look closely at this company and how it will affect both of them. Actually, we'll be doing a comparison too. But let's first look at my portfolio performance. This is the transparency I want to provide to you guys. If you like that type of content, someone who's honest, be sure to subscribe. On this, if you've been watching for a while, I added a little legend to the top right. Anything in green is a gain, anything in red is a loss, and anything in purple is the portfolio allocation of that stock or holding. I am now 15.36 in the green, pretty good. You will see AT&T is down 34%. I have 3 problem stocks in my portfolio. Warner Bros. Discovery is one, and that's an unprofitable company that is now dealing with a writers and actors strike. I have 3M, which is always in litigation, and now AT&T, who has suffered slow growth, high capital expenditures, prior bad acquisitions and sales, and now litigation of its own. They estimate the cleanup to cost between $10 to $60 billion. And when I say they, I mean analysts and third parties. Now, the state attorney generals could sue, and I believe there will be some lawsuits, which is a big worry of mine. So can AT&T and Verizon weather this storm? For that, we need to look into their financials. So here's my stocks facts label that I created to make it an easy read, and let's look at AT&T versus Verizon, starting with the price per earnings. Of course, AT&T has no trailing 12 months price per earnings because they had a net loss, but their 5-year average is at a 7.26, where Verizon has a little bit higher at 11.32, and the trailing 12 months for them is 6.58. Now, the price per operating cash flows for AT&T is 10.47, so definitely more expensive than Verizon's 3.68. And the last 5 years of cash flow growth, it's been in the negative for AT&T pretty significantly by negative 28.11 and Verizon a negative 3.91. Now we're going to look a little bit closer at the cash flows because there's more to this story. But now let's look at revenue. AT&T, both the trailing 12 months and 5 years, is in the negative 5% range, so no growth, just declines. And revenue for Verizon has been very minimal at a 1.41 for the trailing 12 months and 1.66 for the last 5 years. Gross margin, AT&T is slightly better at 58.37 versus Verizon's 57.20. Return on equity is not good at AT&T at a negative 7.74, but better at a 24.15 at Verizon. That is okay in my book. Now, debt. When it comes to these lawsuits, all this money that's going to be spent on removing these lead cables, debt is one of the big items, cash flow is the other, that I'm looking at to see if these companies can handle this. AT&T fares far better than Verizon. Their debt to assets is 38.17, where Verizon's is 46.87%, and the debt to equity for AT&T is 144.7 versus Verizon's 196.99. So right there already, I am liking AT&T better for the preparation of what's to come with these lead cable issues. Now, dividend-wise, AT&T's yield is slightly lower than Verizon's at a 7.61 versus theirs 7.68. Verizon's payout ratio is a 51%. AT&T says negative 89, but that's because not only do they have the losses, but they've had that dividend cut. It all takes part in kind of making it wonky. Now the last 1 year growth, AT&T has grown 0%, and Verizon, a very dismal 1.95, as well as their 5 year growth, it kind of hovers around the 2%. And of course, with AT&T's cut, it's showing a 5 year growth of negative 11.11. So cash flow, let's look at something important here. If we look at their first quarter of 2023 versus fourth quarter of 2022, let's look at their free cash flow. Both of them, kind of oddly enough, this last quarter of 1Q23, they sit at $2.3 billion in cash flow. But if we look at their debt, AT&T holds lower debt than Verizon, $20 billion lower, mind you, at 142 versus Verizon 162 billion. So again, AT&T has a little bit better of a situation. Now, if we go back 1 quarter, it just shows you how wildly cash flow can change, where last quarter AT&T had 12.4 billion, Verizon had 14 billion. How I like to look at this is Verizon had the larger drop in free cash flow than AT&T, down to that 2.3 billion. And I will say AT&T is paying down their debt at a faster rate than Verizon. They went from 147 billion down to 142, where Verizon barely budged at 162.2 to 162 billion. So right here, when we're factoring in cash flow and debt, I like AT&T better. Also, I want to mention, before we leave this little snip here, AT&T paid $2 billion in dividends in 1Q23, and if you look at their free cash flow in 1Q, they're able to cover that, where Verizon paid $2.74 billion because of their slightly higher yield in first quarter 2023, but they have that same $2.3 billion, so they would not be able to cover that. So again, that just shows how AT&T is a little bit better positioned in all these areas, cash flow and debt-wise. So that's why I'm leaning towards AT&T is going to weather the storm a little bit better. Are these dividends at risk with all this going on? I'll say this. The shares outstanding for both companies are increasing, which means they are diluting us shareholders and not generating the cash flow needed to buy back more shares than they are issuing. In my opinion, this signals the companies are trying to protect their dividend payments by raising capital through equity financing and not using their cash to buy back shares, but rather to keep paying their dividend and debts. That's their focus. Again, AT&T is in a better financial position than Verizon with that lower debt, lower cash flow drop, slightly lower dividend payout, and they're going to fare far better than Verizon over this long haul. Now, how could this lead issue impact these companies financially beyond what we've talked about? Well, you're looking at the cost to clean up these lead lines that will last for decades, along with potentially expensive lawsuits that could drag on for years and years. This will slow down the repayment of debt or could cause them to increase debt if they have to. This could also slow their dividend growth or create no dividend growth, or worst case, a dividend cut, which I think Verizon would be the one that would do that because of their poor financial status versus AT&T, who's already done that. But it could be in both cards, but I think Verizon more so. This will probably also limit the growth through reduced investments into their businesses as they focus on these issues. Now, wireless companies are essential services, mind you, and I think if things get real messy, the government will step in to help them out, but I don't expect it to get that bad. I think they will be able to financially get through this, but it will negatively impact their financials. We just don't know to what extent yet. The $10 to $60 billion estimate to clean up these lead cables over the next couple decades can be covered by these companies. That's not my worry. In fact, AT&T estimates that it will cost them $246 million per year in removing these lead cables, and obviously with their billions in free cash flows every quarter, they can cover that. My main worry is the lawsuits that could follow. That's the unknown variable that we do not know the cost of, and why I'm not buying any AT&T until we see what these lawsuits will start to look like. An announcement of a lawsuit will definitely cause these share prices to drop. So I think we continue to see our values in AT&T go down on this downward trend. And AT&T is a company that eventually I do want to get out of. I don't see no long-term growth or wealth creation from holding this company. So why would I continue to add when all it's done is go down? It's not a great investment in my opinion. They have that high capital expenditures, high debt, bad past acquisitions and sales, slow business growth, and now this lead issue that will hang over their heads for many years and decades, just like 3M with what they go through with their litigation. And both stocks now look similar, and we have seen how 3M's lawsuits have dragged down their stock even more. I don't see why it would be different for AT&T. I will not get blindsided by seeing a drop in AT&T stock and putting more money into it to only see it go down more in a month or two. Don't be fooled and continue investing in this dividend trap of a company. That's just my opinion. There's some cases that you can argue where you want to average down, but too many times I've heard investors over the years say that now's the time to average down on AT&T to only have the stock continue to go down and hit new lows, and they lose more money, and I don't see anything that would be different this time. So let me know if you think I am wrong, and if now is the time to average down on AT&T. Do you think this lead issue will be smaller than analysts are expecting? Do you see AT&T actually having some stock appreciation in the future? I'd love to hear your input, and I hope this video put a little bit more light onto this issue, and especially if you hold AT&T. Again, I'm not planning on buying more. I want to get out of this company. Maybe there's a point where it'd be good to average down, but I'm waiting to see what these lawsuits kind of reveal. So with that said, thank you for watching, and see you soon on Mark Arnold's Finance.